Why don't we start off with the action that we're seeing in the futures, a lot of it being driven by the Broadcom earnings. We had a guest earlier said it's another moment of doubt for the AI trade. Do you agree with that sentiment? And then how do you play this? We have so many moments of doubt, even after strong reports.
Yeah. There's a lot of moments of doubt, and it's not just today. It's been over the last couple of weeks, and I think that's why we've seen this kind of rethinking around the AI theme. It's not just go in with any AI stock. It's not go in with tech completely. You really have to look at each company independently, look at those cash flows, look at those balance sheets, and see if it makes sense what we're seeing with the CapEx, along with the expectations of what these companies say they're going to do.
We were also talking about the chatbot race between OpenAI and Alphabet, Google, whichever one you want to call it. As you're looking at that, it's not clear who's going to win. We had a great guest on XI earlier said it's a dead heat right now. And we're in the early innings, and we're using a lot of mixed metaphors. We're doing track metaphors, baseball metaphors, but either way, it's still early in this. When you're talking to clients, how do you talk to them? What are the criteria to pick winners, potential winners at least at this point?
Within AI themselves?
Yes.
So we're actually underweight a lot of the AI names versus the benchmark, and we're trying to spread things out a little bit because we don't want to put all of our eggs in that basket. Start looking maybe at some of the secondary players in AI. Who's actually going to put AI to work the best going forward? We've had a lot of talk about healthcare today. Maybe it's healthcare that's going to use it really well, or manufacturing, other type of industrial names. I think start looking wider than just those Mag 7 names.
All right, I want to get your word of the day. It's owlish. I'm assuming that's in between hawkish and dovish?
It is, but when you think of characteristics of an owl, you're thinking logical, analytical, deep thinkers, problem solvers, observant, right? These are those characteristics. I think this is what investors need to be right now. You can't just say, I'm going to just look at a sector and any stock in that sector is going to do well. You're going to have to dive in and really do the work. What are the trends saying? Find those sectors where you're seeing the rotation right now in the market. When we have a little bit of a pullback, that'll be your opportunity to go in.
All right. You're also looking at the labor market and the consumer, and you're worried about some weakness. At the same time, your pick for us today is a consumer-facing stock.
I knew you were going to be confused about that.
Yeah, so what's the thesis? Is this a trade-down play for higher-income people? Are going to trade down to this? If you're worried about these two things, why pick something that's directly reliant on the strength of the consumer and the labor market?
Yes, so our stock is McDonald's that we're looking at. It's similar to the Walmart story. So over the last couple quarters, people have been concerned they've been losing some of that customer, that lower-income consumer at a double-digit pace, but they're widening their customer base and bringing in higher-income consumers at a double-digit pace, similar to what Walmart has done. So you have that. You have value meals coming in, the $5, the $8. I mean, look, I'm a 2A meal with a Diet Coke any day of the week at McDonald's, and you add a 2.5% dividend. They're becoming less capital intensive, and McDonald's, it is their 49th consecutive year to raise their dividend. Lots of good long-term stories for McDonald's.